Welcome to Finance with Avrin. In this video, I want to tell you about 5 reasons to have a high yield savings account. Now, these aren't the only reasons to have a high yield savings account, and some of the reasons could be kind of blended together with other reasons, to make it like 3 or 4 reasons to have a high yield savings account. But I kind of want to break down each section here and talk about these reasons to have a high yield savings account. Now, one question that may come to mind for a lot of people is, what is a high yield savings account? And what is the difference between a high yield savings account and a regular savings account? Now, the main difference between a high yield savings account and a regular savings account is that high yield part. The high yield savings accounts typically have a higher yield, higher APY, annual percentage yield, which means they have a higher interest rate than a regular savings account. So they're going to pay you more money on interest for having your money in that bank or financial institution than a regular savings account at another bank would typically do. Sometimes I refer to those regular kind of savings accounts as traditional savings accounts because, they're usually, lower interest rates and they're at like the physical locations. Some of the major banks have these savings accounts and they don't typically pay much of interest. They pay, 0.01, 0.02, something, and we'll get more into that. But that is the main difference between a high yield savings account and a regular savings account. Now, there are other differences I'm going to talk about in this video that kind of set high yield savings accounts apart. And high yield savings accounts also have some things in common with regular savings accounts. Now, one thing that sets high yield savings accounts apart is that there has been a lot of competition in this space. Yeah, check that out. These are some of the major financial institutions and banks that have high yield savings accounts. Now, these aren't all of them. There are definitely more. Every other month or so, I do a video on the top 10 savings accounts ranked by APY, annual percentage yield. And so definitely check that out if you're interested in seeing what the rankings of the accounts are in those higher APYs and interest rates. I recently did a video actually in November, a couple days ago. I released it and uploaded it on YouTube here. So yeah, but not all of these accounts right here even make it on that list currently because there are some high yield APYs out there. And for the past year or so, the trajectory of the APYs and interest rates has been going up. So a lot of financial institutions and banks have been raising their APYs. And so this is just a snapshot right here. And then there are also other accounts that fall into the high yield savings accounts realm, but aren't necessarily called savings accounts because they're not, issued by a bank. They're more, underneath a financial institution, a fintech company. And here are some of those. So you see how there are more logos on this section right here of the video. Yeah, I included some of those fintech companies that have these accounts that have high yields that don't call them savings accounts, but they kind of have a lot of things in common with savings accounts. Some of them are like a hybrid of a savings and a checking account. Some of it's like a hybrid savings account. And I've done videos on some of these, mentioned, Wealthfront and Betterment and PayPal. They have these high yield accounts. Some of them, PayPal just kind of calls theirs PayPal savings. So sometimes they'll kind of just have that wording in there, but sometimes they won't. Compared to these other accounts like Ally and SoFi and Capital One, they're just called theirs savings accounts because they're like banks, they actually have that banking. Whereas the fintech companies like Betterment and Wealthfront and so on, they're financial institutions. And so they have these accounts, but although the FDIC insurance and their backing for these accounts are through another bank. So they'll have these high yield accounts and you'll log in and sign up and register and everything through that fintech company. However, the backing of that account would be through a traditional kind of bigger bank, basically. So like, for instance, PayPal, they work with Synchrony for their high yield savings account. So that's just kind of how that works right there. So if you see that, sometimes you're kind of like, okay, I see this logo, but then I see in the fine print, they mentioned this bank. That's what happens in this space sometimes. You have a company up front that has all the account information, your login, and you do everything through them, but then the money, basically like the backing of it, is going to be handled through another bank. Like the transactions, when you're transferring your funds to a different bank and everything like that, they're going to get help from another bank to do that. So a lot of these larger institutions right here on this slide, they don't necessarily do that. Some of them are underneath another bank. Like Lower Road is a part of KeyBank, one of the largest banks in the United States. A lot of people may have heard of KeyBank, but they may not have heard of Lower Road. So a lot of these bigger banks have increased their online presence and added these high yield accounts through their online banking services. And sometimes they'll just call them a different name or they'll acquire them and something like that. So that's how, you have so much competition in this space. But yeah, I can go on and on about that, but let me cut that part short. Let's get into the 5 reasons to have a high yield savings account. And one of the main reasons to have a high yield savings account is the higher APY, that higher annual percentage yield. That's what sets it apart from that traditional savings. And what makes it a high yield savings account is that they have a higher APY, which also means that the interest rates are higher. The APY is that annual percentage yield. So that's going to be overall. So typically that's a little bit higher than the interest rates, because the interest rate is what's pretty much going to be compounded and paid out every month. Some of these companies and fintech companies and banks, they have the interest compounded daily. Some of them compound monthly. And I talk about that in my ranking videos. And so the interest rates are going to be a little bit less than the APYs. Typically, it's around like 0.10% less. So you see a APY of 5%, and that's going to be the annual yield right there. That's how you calculate it. So when you see the APYs, that's a good idea of what the interest rate is. It's going to be close to that. So you have a higher APY, which means you're going to have a higher interest rate. And that's what sets these high yield accounts apart from the traditional savings accounts. And the national average yield on savings accounts ranges from 0.45% to 0.60%, depending on which article you see. That's the kind of numbers I've been seeing lately, updated in November 2023. So yeah, that is extremely low. That's the national average. That's when you get all the averages pretty much of savings accounts that range, from all kind of different amounts. The national average right now is between that 0.45% and 0.60%. I have to remind myself to say point because, yeah, check this out. The high yield savings currently range from 4% to over 5%. Yeah, no point before the number right there, from 4% to over 5%. Like I stated earlier in the video, I've recently done a video of the top 10 savings accounts ranked by APY for November 2023, and all of the accounts on that list were over 5%. So yeah, not saying that you have to be over 5% to be a high yield savings account or over 4% to be a high yield savings account, but that's just pretty much the range right now of what's going on, what I see. Personally, I have two high yield savings accounts currently, and one of them has an APY of 4.60% and the other has an APY of 5%. That's one of the main reasons to have a high yield savings account, and what sets it apart from a traditional savings account is it has a higher APY. And of course, the APYs and the rates are variable, so they are subject to change, each month, each week. They can change at any moment. There's no set range or date that these rates are locked in for. And as you see right there on the chart, these rates, sometimes they hold a little steady, and then sometimes events and different things happen where they start to get raised, they start going up or they start going down. Recently in the past couple of years, right here, you see the rate kind of jump up right there, the national historic average. And that's, of course, still low. That's that, around 0.4%, 0.45% right now. However, that also drives up the rates and the APYs for high yield savings accounts. So they started off, a couple of years ago, these high yield savings accounts, had rates around 1% or so or something like that. And that was still extremely higher than, 0.30, 0.15, or 0.05%, 0.01%, and all that. However, they've been raising as well. The high yield savings accounts have been raising, just like the whole average of savings accounts rates have been raising. And that's somewhat linked to the federal funds rate and how they've been raising that rate. And I won't get into all the details of that, but as you see on the chart, these rates are variable. They do change. They can change month to month. They can even change, a few weeks to a few weeks later. It just depends on the financial institution themselves and the bank, how they handle things. Typically, I see these rates. Like I stated, I do these videos, and I'm really into this space right here of banking and finance and interest rates and APY. So typically I see some of these companies, hold their rates and APY steady for a couple months or so, and they kind of reevaluate things and they'll change them. Some of these companies raise their rates every other month or so. Some of these companies raise their rates every month. So it just kind of depends right there, but they are variable. So they are subject to change. And now another reason to have a high yield savings account is compound interest. One of my favorite combinations of words right there. Compound interest is the interest you earn on interest. Yes. So interest is compounded on the principal amount, which includes interest. This is a way of your money working for you, and it accelerates with time. So compound interest. Okay, so let's take a step back, and I'm also going to incorporate this graph that you see on the screen. So interest. That is the money, you earn on your money in a savings account, just interest. We'll just talk about interest. So let's just say, for example, you have a $10,000 in a savings account with an APY of 5%. So that's 5% annually, your APY basically. So the interest rate is going to be around 4.88% or so. So after 1 month, we'll just say that the interest is compounding daily. That's a lot of banks, like financial institutions, have the interest compounding daily and it pays out monthly. So we'll just use that as an example. So you got $10,000, 5% APY. After 1 month, that ending balance is going to be $10,040.75. So that's the interest that you earned in that 1 month, $40.75. So yeah, that's interest. That's nice, right? Your money just sitting there and it worked for you and you got more money at the end of the month, next month. Typically these companies, they'll pay out the first or, of the next month. So you have interest there. And that's for if that $10,000 was in that account for the whole month. Even if it's not in there for the whole month, you're still going to earn interest for the days that it was in the account. Typically is how that goes. So we'll just say for this example that $10,000 was in that account for the whole month. Now, compound interest. This is where compound interest steps in. So compound interest is where you're going to earn 5% not only on that $10,000 you had in your account, but that $10,000 plus the interest you earned from the previous month. This is where the magic happens. So you have your APY 5% on that $10,040.75. And so now for that next month, you're not going to earn $40.75 in interest. No. You're going to earn more than that because that 5% is on more than $10,000, is on $10,040.75. So after that next month, your balance is going to be $10,081.66. So you have more interest that you earned in that next month because your account balance is higher. That is compound interest. That is interest compounding on the principal amount, which includes the interest that you recently gained. So that principal amount is no longer just $10,000 in this scenario. That principal amount changed to $10,040.75 because you got that interest in the first month. Now you got more interest in the next month because it's on top of that interest, and it goes on and on and on like that. That is compound interest. More interest you're going to earn because you're earning it on more money if you let it sit. This is in a scenario where you just let the money sit. Some people are going to withdraw, and that's going to change things. And what can make this even more magical, even more awesome, is that if you add money to the savings, then, just out of your, let's say $100 a month or, $100 every 2 weeks, something, every time you get paid something, $50, whatever it is, you're going to be earning interest on the amount in your account plus the amount you're depositing plus the interest you've earned. So as you know, as from the example I told you, that's going to be even more money in interest you're going to earn. Compound interest. And that's going to be every typically month when they pay out. So every month going to be more and more and more interest. Let me show you again on another screen because compound interest is awesome. So let me show you. This is what I'm talking about right here. Another example, different rate right here. So you got $10,000 APY of 5.05%. And I'm just showing you this from each month right here. I just gave you previously, I just talked about a couple months and I showed you a graph. So that was nice though, right? Let me show you the numbers here. So adding this example, $10,000, 5.05% APY. You see the first month of interest, $41.14. Nice. That balance went up to $10,041.14. All right, next month, we'll just say you stayed the same. You didn't add any money to the account. You didn't take any money out of the account. So you're earning 5.05% on $10,041.14. So now the interest you get paid for that next month, it's not $41.14. It's $41.31. So now your total interest you've earned is $82.45. So now your balance is $10,082.45. Okay, 2 months down. Let's go to the next month. Now you're going to be earning 5.05% on that new balance of $10,082.45. So you're not going to get the interest from the first month, $41.14. You're not going to get the interest from the second month, $41.31. You're going to get a new interest amount because the interest is accumulating and compounding on more money. So that's $41.48 on $10,082.45. So your new balance is $10,123.93, and so on and so on. And you see about towards the end of the year, and this is just in 1 year, 12 months. That 12th month, you got $43.04 you're earning instead of $41.14 from that first month. You see that increase right there. And that's just if you just kept $10,000 in this account and didn't do anything. So in a year's time right there at 5.05% on $10,000, you would earn a total of $505. And that's not doing anything. You didn't have to do anything for that. You just let the money sit in the account. That's just the money sitting in your account working for you, basically. You're sitting back. That's your emergency savings. I don't know. That's your savings for a vacation, part of it. That's your savings for a car, all of it, part of it. I don't know. Whatever you got it for. Savings account. People have savings accounts for different reasons. Emergency savings, just back up. And I'll talk about peace of mind and things a little bit later. Reasons why people have savings accounts. Things can happen in life. Of course, life happens. So yeah. But anyways, so that's your money working for you right there. $10,000 could just be sitting there, but you have that high yield of 5.05% in this scenario, which means after a year, if that APY stayed the same, now they're variable, so they could change. This is just a simple example. But if that APY stayed the same, 1 year, you earn interest of $505. That's just coming to you for your money just sitting there in a high yield savings account. Not your money just sitting there, just cash under the mattress or in the freezer or at a little at another account that's earning, 0.01 or 0.05% or something like that. Gosh, that number will be so much lower. I'm not even gonna put that on the screen. I don't want that on my screen. I'm not gonna give you an example of how much. Okay, I'll give you an example. All right, I'm just for purposes. Okay, all right, real quick on the screen. If you had, please don't do this, but have a high yield savings account. Okay, so just a quick example. I don't even want this on my screen for that long. So yeah, if you had $10,000 in an account that paid 0.05% APY, after 1 month, you would have 42 cents in interest. That $10,000 would be $10,000.42. A lot of people have their money in those regular, traditional, whatever you want to call them, savings accounts with those low APYs. Look at that difference. Instead of having 42 cents in interest, you could be in an account at 5.05% in this example and have $41.14 in interest in that first month. Yeah, and it compounds. Now, yeah, that 0.05% is going to compound as well. That's laughable though. Okay, that's it. That's all I'm going to give the screen time of that 5.05%. So yeah, compound interest. That is one of the reasons to have a high yield savings account. And another reason to have a high yield savings account is that it's risk-free money growth. And now the money growth part, we've pretty much kind of talked about, and I'm kind of looping in some things in this one right here, this reason right here. This is kind of a combination of some things, and I'm going to get more detail about why it's risk-free as well and another reason. So yeah, risk-free money growth. Your money in a high yield savings account, it isn't investing. It isn't betting. It isn't gambling, anything like that. It's not going to lose its principal amount. That $10,000 in that previous example I told you, it's not going to go down to 8,000, 9,000, depending on what goes on in the economy. A crazy day in the stock market, something happens, some other country, something happens at any company, something like that. That principal amount you had at $10,000 isn't going to go down to 9,500 or something like that because of something outside factor going on, even the inside factor at the bank going on, something, at the financial institution you have it at. That money is safe. It is risk-free. And I'll talk more about how it's safe in another reason. We'll get into that. So yeah, that is risk-free. The money is growing. The interest is gaining. The interest is compounding. And it's not any risk to that. Yeah, the interest rate and APYs are variable, so they could change. But that principal amount, the interest you earn, isn't going to go down. That $41 or so that you gained in interest that previous month in that previous example isn't going to go away. The bank's not going to come back and say, hey, that interest we've been paying you for the past few months, we're going to need that back. No. That interest that you earned is yours. That's your new principal amount. That's your new amount in your account, your new balance. That is risk-free money growth. Your deposited money and earned interest remain until withdrawn. That balance in your account at that high yield savings account is your balance in your account at your high yield savings account. And the only way that changes is if you add more money or deposit more money to it, transfer more money to that account, or, the interest that's gaining on the account, that every month or so when it gets paid out, it's going to change then. It's going to go up. So it's a good thing. It's not going to go down. So you have that. It can go down for sure if you're the reason why it goes down. If you withdraw money from your savings account, if you transfer money from your savings account to another account, that's where it goes down. That's in your hands. This is risk-free money growth. This is in your hands. How your account handles itself, basically. How your account looks is in your hands. It'll keep growing if you let the money sit there, if you add more money to it, all that. Now, yeah, it'll go down only if you're the reason why it goes down, if you withdraw, if you transfer out. Also, high yield savings accounts, they don't typically have maintenance or balance fees. So you're not going to have like every month or $4 or $5 coming from your account, subtracting from it because, for maintenance reasons. Now, some traditional regular savings accounts at big, brick and mortar banks, the local banks and things like that, some of them have maintenance fees where they'll charge you every month a certain amount just for having your account. Some of them charge a fee related to your balance of your account. If you don't have a certain amount in your account, whether it be the savings account or another account you have with them or a combination of all your accounts, if they don't hit a certain, minimal amount, then you'll get charged a fee. Some of you definitely know about this because you may get charged these fees or you used to or something like that. Some of you all in the high yield savings space that have high yield savings and have had them for a long time that maybe haven't banked with another kind of bank are like, what? Really? Yeah. Some banks and financial institutions will charge a certain amount to people if they don't have a certain amount in their account. Yeah. Typically high yield savings accounts, a lot of those banks, I showed you at the beginning of the video, all those Ally, Lending Club, and Synchrony, and SoFi, and so on and so on. They don't have any kind of monthly maintenance fees where they're going to charge you, a certain amount because you don't have a certain amount in your account, or just charge you a certain amount just because. So yeah, that's another way that you have your money growing without any kind of limitation, something holding it back. Also, while I was talking about peace of mind, risk-free money growth. Money in a high yield savings account is peace of mind for emergencies, for volatile stock market and economies. There's been a lot going on in the stock market and the economy, and pretty much all the time. I could just say that and just leave it at that. But definitely in these past couple of years, and your money in that savings account is not going to change because of that. It's not going to change because of an election coming up, or because of a war going on, or a pandemic, or anything like that. How the stock market moves. And this is against investing. Let me take a step back right here. This is definitely not saying, hey, put all your money in a high yield savings account and don't invest. I am a big time proponent of investing and being in the stock market for sure. Ride out the volatility in the stock market for sure with a certain amount of money. Definitely, I like to have a certain amount of money in my savings. That's separate for that peace of mind, no matter what's going on, for emergencies, for what's going on in the stock market, things like that. And just having a savings account is just a little bit of financial freedom, a little tucked away kind of. Volatile stock markets, I like to buy honestly when the stock market is very volatile. When it's down for sure. I buy throughout the year when it's up and down, no matter what, dollar cost average. And I won't get into all of that, but I just wanted to let you all know that this isn't anti-investing or anti-stock market. Definitely not. Definitely not. This is separate. This isn't saying put all your money into a high yield savings account. This is the reasons why to have a high yield savings account as a part of your financial portfolio. Yeah. So yeah, high yield savings account will help you have some peace of mind. So when your investing account is all over the place, you log in one day, you're like, wow, the S&P is down this much, and and this company is down, reported this, and this is going up. You might get stressed out. If you've been in it for a while, you're, accustomed to it, or like me, when I see those down days, I don't get real like, oh my gosh, I'm looking for, okay, something undervalued here, or something oversold. One of the stocks I like a lot, of ETFs. Should I be buying more? And I'll increase the amount I normally, buy for that stock or that ETF during, down moments in the economy and the stock market. However, you have that peace of mind. They'll say like, oh, well, I still got my 20,000 in my savings account, or, whatever it's at with all the interest, it's all right. Yeah, my portfolio may be down a couple thousand or whatever today. Oof. Hey, I still got my savings account. That's cool. The stock market could be down for months, a year or so. And, some people panic sell and things like that. Sometimes you got to cut your losses. Sometimes I need to get out of this stock. It's going to go, zero or go real down. Depends on, we won't get into all that because I could definitely get into all that. But for me personally, definitely invest, definitely have money in investing for sure. But I like to have that high yield savings. So yes, peace of mind, but it's not saying don't invest, just have a high yield savings. Definitely not. So yeah, high yield savings, like right here I'm talking about, as you see on the screen, is good for short-term goals and emergencies. Now, my high yield savings is kind of like a long-term thing. I'm just going to let that money keep compounding, and I'm going to add more money to it here and there. Sometimes I kind of reach a cap where I'm like, okay, that's good for now in that high yield savings. I'm going to pretty much put all the extra money I have into these stocks or these ETFs, things like that. So yeah, I have certain amounts. People should have there's typically, you see articles and news headlines and videos or whatever about how much to have in your high yield savings. Some people say, 3 to 6 months of your living expenses. Some people say 6 to 12 months of your living expenses. Around 6 months is kind of like an average I kind of see. So yeah, you want to have basically a certain amount in your savings that could sustain you if something went wrong. If you lost your job, big medical expenses come, something that really took a hit to your income. Now you have that high yield savings there in place for that peace of mind to help you get through that moment in your life till you get back on your feet. So yeah, high yield savings account would help you out more than a traditional savings account in that, because you're going to be earning more money on that emergency stash, on that savings amount for when those bad times happen. And hopefully those bad times don't happen. And it's just money that's sitting there that you can maybe pull from. You say, okay, this is getting a little high over here in this account. I'm going to pull some from my high yield savings account and invest that money because I can make more money. Typically, you're going to make more money long-term in the stock market than you would in a savings account. Because as you see right here, bottom bullet point right here of this slide, less risk, less reward is what's going on with the high yield savings. There's less risk and there's less reward compared to the stock market. But however, it is much better than having your money just sitting. You'd be surprised. A lot of people just have their savings account money just sitting, either physically, just in cash, somewhere in their house, somewhere, a vault, a safe, under the mattress, in the freezer, wherever, under a sock drawer. And then some people have their savings at some bank only paying, that 0.1%, 0.9%, whatever, something low like that. That's basically your money just sitting. Anything under, pretty much to me right now, anything under like 4% is just your money just sitting. Yeah, 2%, 3% is good. It's better than 0.0 something, point something. But yeah, a lot of these banks pay 0.0 something, 0.5, point something like that. And that's just your money just sitting basically. So yeah, high yield savings account is less risk than investing. However, it's less reward than investing, but it's much better than your money just sitting. Definitely great to have a part of your financial portfolio. Have that checking account, of course, for your transaction, paying the bills, all that stuff. Have that high yield savings account for peace of mind, for emergencies, for goals, for saving for this or that. And then have your investment portfolios for retirement and for long-term investing, your Roth IRA, your traditional IRA, your 401k, whatever. High yield savings is a great complement to all of that. Now let's get to the next reason. This is where I was talking about the safe part. Safe money savings. This is another reason to have a high yield savings account. Now, this applies to a lot of bank accounts in general and regular traditional savings accounts, is that a lot of banks and a lot of financial institutions with these accounts and high yield savings, regular savings, have FDIC insurance on their account. High yield savings are no different. Typically, pretty much all the high yield savings I talk about on my channel, on the ranking videos or the separate in-depth review and overview videos I do, all of them are going to be FDIC insured. I'm not going to talk about an account on my channel personally if it's not FDIC insured, because the FDIC insurance is very important. And high yield savings accounts are typically FDIC insured, especially the ones I talk about. Now, FDIC is an independent agency created by Congress in 1933 during the Great Depression. It was to help instill, a sense of security and confidence in people of America, because a lot of banks were failing and things were going on catastrophic in the financial world, basically. So this was an agency that was created to step up and kind of handle that, because they're going to insure the money that you have, your deposits in banks that have the FDIC insurance. And the FDIC insurance is free. It is free insurance that protects your deposit in the event of a bank failure. So, and that's still been happening. This isn't something that stopped happening when they enacted the FDIC when it was created. Banks still fail. Earlier this year, there was banks that were failing. So in 2023, banks are still failing. However, FDIC insurance is still stepping up and making people whole. Ever since the FDIC has been created, no customer who's had deposits in an FDIC insured bank has lost money, even when that bank goes under. FDIC insurance is free and will help protect you in your deposits in bank accounts that have the FDIC insurance. And your deposits, like I stated, $250,000 amount, that's pretty much the amount right there. Your deposits are automatically insured to at least $250,000 at each FDIC insured bank. Those are for individual accounts. Sometimes it increases, for joint accounts up to $500,000. And some of these fintech companies like Wealthfront and I believe Betterment and even the SoFi, some of these companies, these financial institutions and banks have it where you can actually gain more FDIC insurance, more than that $250,000 amount, with your money in that account with them. And that's pretty much what they do with that, is they kind of spread out your money to other program banks, to other partner banks that they partner up with to give you that more FDIC insurance, to increase that amount. Now that can be subtracted if you have money at that other bank that they partner with and things like that. So it is there. Like, a lot of people aren't going to have, more than $250,000 in a savings account. Some people may, hey, definitely. I'm sure there are people that do. And so they're probably going to either want to at least spread out their money to different banks, or have it at a financial institution or bank that offers that higher FDIC insurance. So, but typically right now, $250,000, that's the amount that is automatically insured at each FDIC insured bank. And high yield savings aren't excluded from that, just because of a bank paying a higher yield and they're paying more money to their, customers for having money deposited in their bank with them. They aren't going to say, oh, we're paying you more money, so we don't insure your money or anything like that. No. Typically, a lot of them, pretty much, I'm sure there are some out there that don't have FDIC insurance. Like I say, I don't typically spend much time on those. But the ones I talk about on my channel, the ones that have made my ranking video list and things like that, have the FDIC insurance. So yeah, there are a lot of banks with high yield savings accounts that have FDIC insurance. Some people see the high yield savings, they're like, what is, okay, that's kind of sketchy. How are they paying out 4 or 5%? They must not be a real bank or something like that. No. There are definitely several high yield savings accounts that have FDIC insurance with them. All right, next reason. And lastly here, but not least important or anything like that, another reason to have a high yield savings account is that the money is easily accessible. Just because it's a high yield savings doesn't mean it's like, oh, your money's locked away, you can't get to it because, we got to keep your money here because we're paying you money. No, nothing like that. You have various ways to access your money in a high yield savings account. So yeah, a lot of these companies that have these high yield savings accounts, they don't have a lot of physical locations spread out in areas where you can go to your bank, for your high yield savings account and say, hey, I want to do this and this with my money and things. That's part of the reason how they're able to pay that higher interest sometimes, that they have lower overhead costs and things. They don't have those physical locations and paying all the employees and the rent on the actual building or anything like that. So banks and financial institutions that have these high yield savings may not have physical locations and everything, but that should not deter people from using the accounts because you can still access your money very easily. With these high yield savings accounts, and this is typically for pretty much all of them, I haven't seen any where you can't do any of this. Now, the third bullet point, yeah, that's separate, and I'll talk about that. But yeah, for pretty much all the high yield savings accounts I've seen, you can transfer your money internally. So you can transfer it from your savings account in that bank to that checking account in that bank. So you could transfer it back and forth. SoFi, for example, is pretty much instantaneous. I use it personally. I could transfer money from my savings to my checking or from my checking to my savings, $100, $1,000, whatever, and it's there in a couple minutes. Not even a couple minutes, it's usually there in seconds. So yeah, you can transfer money internally in that account. So I got money in my savings. Oh, I want to spend something in my checking. I want to use my debit card somewhere. Let me transfer money from my savings to my checking. Boom. Although me personally, I would use a credit card, get the cash back amount, and then pay off the credit card before the statement cycle in. But yeah, we won't get into that. So yeah, but you can do that. Internal transfers. Also, you can do external transfers with these high yield savings accounts. So you don't have to have your checking account or another account at your bank that you have your high yield savings at, or you can, it's up to you. You can transfer money from and to your high yield savings to another bank. So let's say you have a checking account with Bank of America, but you have your high yield savings with Ally. You see the app right there on the screen. You can still transfer money from your savings account at Ally to your checking account at Bank of America, or vice versa. You could transfer from your checking account at Bank of America or wherever, Chase, to your savings account at Ally in this example. And this is free right here. This doesn't cost anything. The internal transfers, the external transfers, there's no fees associated with that either typically. So yeah, you could easily access your money that way. And also wire transfers. You got a large amount of money you need to receive or send or something. Typically, these high yield savings accounts have access to the feature of wire transfers. So you can transfer your whole amount or wherever you're getting from, wherever to your high yield savings account. Sometimes there's fees associated with that here and there. Sometimes there's not a receipt. Sometimes there's not a fee for receiving, but a fee for sending or vice versa, things like that. So you want to check that out in case, but typically the fees, if there are a fee, is not anything outrageous. But yeah, so you can have wire transfers with high yield savings accounts as well. For high yield savings accounts, one of the, I think, main ways of people transferring money and moving money is going to be that external transfer. So if you have another account, your checking account with another bank, you could transfer money from, let's say you get your direct deposit at another bank and you want to put some in your savings accounts. Then you can make a transfer from that account to your high yield savings. You would say, for example, at SoFi, you can set up the transfer to receive money, put in the information. You got to do the verification. This isn't just say, hey, I want to receive money from this bank account. There's verification and steps to this for sure. You got, accounting numbers, routing numbers, or logging in with your password, all of that. You got to set up all that. Of course, you could do that within the app or the website, but you can set it up to receive the money from that bank account, or you can set it up to send money to that account from SoFi within. And this isn't a SoFi thing. I'm just using this as an example for the high yield savings accounts. So you can move money within the app and within the online website through that company that you have your high yield savings with. You can move money to and from your high yield savings account. Very easy, very accessible. And also, some high yield savings accounts have ATM cards with nationwide ATM access. I recently done a video on that about last month, top 3 high yield savings accounts with ATM cards. Definitely check that out. Put a link down in the description for that, and I had a couple honorable mentions as well. So yes, some high yield savings accounts have ATM cards. So if you wanted to withdraw cash from your high yield savings, which isn't something that a lot of people advise because savings accounts are typically for savings, so you don't want to touch them, but sometimes you need the cash. Sometimes you may need the money, and you may want the actual physical cash of it. Now, if you had a high yield savings that didn't have an ATM card, then you can do that process I was telling you about earlier, where you can transfer from your high yield savings to your checking account at another bank that has an ATM card and ATM access and get your money that way. However, there are high yield savings with ATM cards where you could find, ATM locations. And I talk about that on that video that I recently released. And you can find a location to withdraw money from your high yield savings account. So yeah, some high yield savings accounts have ATM cards with nationwide ATM access. And also another way your money is easily accessible is that you have 24/7 access to your account info and transactions via the websites and mobile apps for these accounts with these banks and financial institutions. That is one thing that high yield savings are really big proponents of with these online savings accounts, is that they want you to be able to have access to your account at all times. You got an internet connection, you got a data connection, you got 24/7 access to your account. You can check the balance of it, set up those transfers I was talking about. Some of the banks have a feature of mobile check deposit, so you can deposit a physical check, just different things you can do at 24/7 access to within the mobile app or the online website for your high yield savings account. So another way you can have access to your account. You may not want to move anything around. You may just want to check on your balance. You want to see how much interest you earned last month. You want to just, anything right there in the palm of your hand. These high yield savings accounts typically have mobile apps, through the bank on the website. It's not a separate app or anything like that, like Ally. It's not like this is the Ally online savings accounts app. This is within the Ally app, within the SoFi app. Apple recently released a high yield savings account earlier this year. And, within the wallet app right there, pretty much you have your savings account is within the app on your phone. All right there, you're connected to your high yield savings account pretty much at all times if you have a Wi-Fi data connection, something like that. So another way your money is easily accessible. You don't have to go to a physical location and say, hey, I need to transfer this, or I want to see my balance, or can you print me off a slip with my balance on it or something? No, just log into your account on your laptop, on your computer, on your phone, and boom, your account is right there with a lot of information in the palm of your hand or at your fingertips. So yeah, that is another reason to have a high yield savings account. And so yeah, that is it right there. I hope the video wasn't too long. Sometimes I go on those little rambles and tangents, and I'm going to definitely edit this video so it won't go on as long as I record it, because it definitely went on. So yeah, if you like this kind of content about, bank accounts, savings accounts, checking accounts, CD accounts, investing, stocks, ETFs, all that personal finance content, definitely make sure you're subscribed to the channel. If you like the video, make sure you tap the like button down below. All of that helps the channel for sure, and it helps me. Thank you all to everybody that's done that before in the past. If you're subscribed to the channel, thank you. If you've liked any of my videos, thank you. If you've commented, thank you. Just thank you. Right here, the channel is growing, and I really love creating this content and getting it out to the world, increasing that financial education, that financial confidence, all of that. Just great. So yeah, thank you all for watching the video. Hope you all enjoyed it. Take care.